Hello guys, I'm going to present to you the solution for exercise 5, chapter 4. I'm going to give you a breakdown of the solution step by step. So exercise 5 reads, in its first year of operations, Wild Horse Company recognized 33,700 in service revenue, 7,800 of which was on account and still outstanding at year end. The remaining 25,900 was received in cash from customers. The company incurred operating expenses of 19,400. Of these expenses, 13,600 were paid in cash. 5,800 was still owed and on account at year end. In addition, Wild Horse prepaid 2,680 for insurance coverage that would not be used until the second year of operations. So what we need to do in this problem, well, first we're going to read what we're requested to do. So A says calculate the first year's net earnings under the cash basis of accounting and the first year's net earnings under the accrual basis of accounting. So again, what we need to do here is to identify which revenues and which expenses were paid in cash throughout the first year of operations. And in order to do that, we're going to have to go ahead and reread the problem again. So services paid in cash, we were being told that only out of the 33,700, only 25,900 were received in cash from customers. So 25,900. And expenses, out of the 19,400, we're being told that only 13,600 were paid in cash. So 13,600. Also, it says that in addition, Wild Horse prepaid 2,600 for insurance coverage that would not be used until the second year of operations. So on this one, even though it's not going to be used until the second year of operations, it was still paid in the first year of operations. So we used cash to pay for this expense, and we're going to record it here, 2,680. We add this quantity, and we have 16,280 expenses paid in cash and 25,900 services paid in cash. We subtract this quantity of expenses from services, and it will give us 9,620 for cash basis net income, which is right here. And as you can see, it's already correct. The answer is correct. Then we're also being asked to calculate the accrual basis. So on this one, it says that the accrual basis is on all the services performed in the first year of operations. Okay, even if they were not paid in cash, like the case of accounts receivable. So in here, we'll take the whole amount, which is 33,700. The expenses were 25,900. Never mind. Expenses were 19,400. And the prepaid insurance, even though it was paid with cash on the first year of operations, it's not going to be used until the second year. So we cannot take that into this account. So we will only subtract 19,400 out of the 33,700. And we will get our accrual basis, which is 14,300. It's right here, which is correct. Then we're also being asked to answer this question, which is on which basis of accounting, cash or accrual, provides more useful information for decision makers. And in the textbook, we're being told that the cash basis is often, or it often produces misleading financial statements because it may not reflect revenue in the period that a performance obligation is satisfied. So that's what we use on accrual basis accounting instead.